crypto paradise. Ooh. No banks, no fees, no more 9 to 5. What a way to make a living. Crypto is on the rise, making that dough in the crypto paradise. Watching it go, buying low, selling high. Riding the wave, I'm here to stay, living in the digital age. No banks, no fees, just decentralized. It's crypto paradise. Ooh. No banks, no fees, no more 9 to 5. What a way to make a living. Crypto is on the rise, making that dough in the crypto paradise. Watching it go, buying low, selling high. Riding the wave, I'm here to stay, living in the digital age. No banks, no fees, just decentralized. It's crypto paradise. Ooh. No banks, no fees, no more 9 to 5. What a way to make a living. Crypto is on the rise, making that dough in the crypto paradise. Watching it go, buying low, selling high. Riding the wave, I'm here to stay, living in the digital age. No banks, no fees, just decentralized. It's crypto paradise. Ooh. No banks, no fees, no more 9 to 5. What a way to make a living. Crypto is on the rise, making that dough in the crypto paradise. Watching it go, buying low, selling high. Riding the wave, I'm here to stay, living in the digital age. No banks, no fees, just decentralized. It's crypto paradise. Ooh. No banks, no fees, no more 9 to 5. What a way to make a living. Crypto is on the rise, making that dough in the crypto paradise.
What's going on, you filthy degens, and welcome back to another midweek market update. As always, I'm joined by the Crypto Hitman, and we're here to discuss all the inner workings of the wonderful world of crypto in the last couple days, the last week. It's been another wild one. Not as crazy as the last 2 weeks, but more developments on a lot of the stuff we've been talking about, and some interesting data rolling in today and more tomorrow that could greatly impact everything that's going on in the overall markets, the TradFi markets, but more importantly, what we're all here for, what's going to happen in the crypto markets. How are we doing today, Nick?
Doing pretty good. I mean, the CPI expectations were 2.9%, came in at 2.8. Markets like that a little bit. Obviously, if you've been watching, I think the last mid-week market update we did, been saying downside risk on NASDAQ was 19.3 to 19.4. That's kind of where we bounced off of. We've had a 1% bounce. We're up to like 19,550 right now. It's nothing crazy, but so far that important level has held. It created some green in crypto, although be it Bitcoin's still very far down and Ethereum still sub $2,000. So still sitting on these critical levels, and something needs to happen quickly.
Yeah, and Ethereum's making some people pay. We're going to take a look at that here in a little bit. A major liquidation going on today. But yeah, to start, taking a look at the CPI data that came in. While the markets haven't been, didn't see any explosive move. I don't think anybody was expecting that. But the better news is that the market isn't dumping. We got a better than expected result from the CPI, and obviously markets responding positively, not crazy positive. See if I can open this up a little bit bigger. There we go. It's probably a little easier to see on stream there for you. You can see, previous month, 0.4% expected. The forecast was 0.3 and came in at 0.2. That's the month over month. And the year over year, the more important number, expected to come down to 2.9 and came in at 2.8 there. So CPI, for those that aren't familiar, it's a consumer price index. It's a major way that they look at calculating one of the factors for inflation based on the overall price of goods are in the U.S. there. Obviously, the biggest economy in the world and drives a lot of the other markets around the world. But so getting that number coming in lower than expected, very, very positive for markets. And what it can mean that will be more impactful for all of us is that next week we have the Fed meeting where they're going to be discussing interest rates again. As we all know, one of the biggest factors that's been holding markets back is the fight between Jay Powell and Donald Trump on lowering interest rates. Getting numbers like this, how impactful is that? How important is that for the Fed to start cutting rates?
Well, I think it's pretty important. Number one, if the Fed is cutting rates, that's because they believe inflation is trending in the right direction, and ultimately they want it below 2%. Also, the cutting the rates means cheaper capital, and when people, entrepreneurs, investors can get cheaper capital, they're more willing to take out loans with that cheap capital and deploy it into other business opportunities, other investment opportunities, collectibles, and risk on assets like Bitcoin. That's why we saw a massive explosion during COVID last cycle in collectibles and Bitcoin in particular. Very low interest rates means near free money, which can find its way into various markets.
Yeah, absolutely. That was probably the biggest driving factor of what we saw, the run up here, and just with the overall positive markets, throughout COVID with the stock market going crazy, Bitcoin going crazy, was that cash was essentially free to get your hands on, and that's where all those inflows started coming from. I want to give a quick shout out. Thank you everybody tuning in already. We're 2 minutes into the stream, got 20 people watching here with us. Big shout out. If you guys can give us a like, leave a comment, and give us a retweet or a share if you're watching on YouTube. Really, really helps the algorithm, helps to let more people know about this, boost the channel, and lets us get a bigger reach. Bigger reach for us means more clients means more giveaways for you guys. If you've been around the channel for a while now, our goal, really one of our biggest goals, is to give back as much as we can to our followers. We've been doing that in big ways with our Telegram mini app. We launched that back in the beginning of December. Since then, we've been giving on average over $1,000 in a week away of all sorts of different crypto projects that people are winning. And the biggest one most recently, we just finished up the $25,000 Tortoise airdrop. More of all of that is going to be coming down the pipeline very soon. But that's a big way you can get some crypto with us. And again, the better our channel does, the more opportunities that we have to give back to you guys. So if you can, give us a like, give us a share. It really helps out. Bring more people to the channel and boost the overall metric for the business. Also, big shout out to Bybit, our main channel sponsor. If you guys are looking to get started in trading, they have up to a $30,000 bonus for anybody that signs up using our link. You can find that on our website. You can find that in our Telegram group, and you can find that on the top of our X page in the bio there. So it's a little housekeeping to get out of the way early on here. CPI numbers today, very, very important for the interest rates coming down and the money printer turning back on, which we know what happens to risk on assets like Bitcoin and all of crypto when that happens. We got another big number coming in tomorrow. The PPI is coming in. That's the producer. Where are we at this week? PPI. Yeah, PPI, CPI, and where's our PPI? It's tomorrow? Yeah, here we go, PPI. PPI comes in tomorrow, expected for a drop to 0.3%. What are your thoughts on this? Are we getting any surprises tomorrow with that, or should it be expected to roll out similar to CPI today?
Yeah, I don't think there'll be any major surprises. Really, most people aren't even quoting PPI most of the time. They're talking about CPI and they're talking about rate cuts. So, I mean, it would be great if it trends in the right direction, but I just don't think it's going to make any meaningful impact on the markets yet. There's still a lot of uncertainty in traditional markets. I think you see that. The CPI beat, but NASDAQ only went up 1%. Well, that's because it went down 3% yesterday. So things are still looking pretty ugly, but every bullish point is a good one. for the long-term, midterm future here. We're seeing more and more bullish crypto news being released. We got the CPI news. Hopefully, the betting markets are saying that there'll be 2 or more interest rate cuts this year. So all that is pointing towards markets should do well, but overall, just indecision and the big boys still holding prices down here. So I don't think anything that happens tomorrow with the PPI is going to be meaningful. Could it be another bullish data point, maybe a 0.5%, another green day? That's, you got to start somewhere, right? One green day at a time to eventually the momentum switches and we go back into a bull market.
Yeah, I think the bigger thing right now to focus on the positive aspect of all of this is that it's temporarily at least stopped the bleeding.
Right.
The big one is going to be next. We can see that we've got up there the FOMC press conference. Will be next week, and that is where the Fed announcements will be made as to what you just talked about. How many rate cuts are they going to do? What type of rate cuts are they going to do? Are we going to get any unexpected news there? That so far, Jay Powell has been very reluctant to do any cutting or to lower those interest rates. He's in disagreement with the Trump administration on that. Do you think we're gonna see a little change in his narrative coming in after these readings?
Well, I don't know. I think Truflation is saying that inflation right now is actually at 1.45%, but they're usually 45 days ahead of government data, meaning that's not what government is going to see yet. So this one could be a bit of a nothing burger or no rate cuts yet, or they're still going to wait and see. But I think by the next one, based on history, if Truflation is right, within the next 45 to 60 days, then we'll be on track, and Jay Powell will start seeing the numbers that we're seeing on true data. And he'll start agreeing to start cutting these rates. Really, ultimately, that's what Trump wants to do. Trump wants these rates to get cut. Trump wants cheap capital. So as these businesses are moving back into the United States due to tariffs, they can get cheap capital to invest in manufacturing warehouses, new jobs, new investment opportunities, entrepreneurs to make moves. So that's the battle that's going on. And, it's still very soon. Yes, CPI number's good. I don't know if they're going to come out and say, hey, let's cut the rates. The other thing that I'm interested in is how and when do they account for unemployment or jobless claims? Because, they could argue that, well, they cut, 40% of the government's all fired. But do those really count as unemployment if they're getting 8 months severance plus their final paycheck plus PTO payout? In my estimation, they shouldn't count because they're still on a government salary payroll for another 8 months, really 9 months if you count the PTO and the final paycheck. So that will be interesting to see as well, is if they come out, I can already see it now, mainstream media, we have 6% unemployment, and that's because they're counting the millions of federal employees who are on the payroll severance for another 8 months in that data point, which would be negative on the surface, but I think if you look deeper, it's a nothing burger as well.
Well, not to mention those jobs are much less impactful to the overall, economy. When you look at where are their salaries being paid from? They're being paid out of the U.S. Treasury, paid out of our tax dollars. These are jobs that are generally contributing to the economy in a meaningful way. That's money coming from our own pockets. So
right.
Yeah, I'm 100% with you on that. Been seeing a lot about the effect the administration's first 2 months in here, and a lot of people Trump was supposed to be the first crypto president. So we're sort of gonna get tired of winning. How's that going now? Well, this is what he's doing is a pretty standard play out of the economic playbook. Great post here on Acquirify. One of the things that a lot of people are overlooking, aside from the other reasons with these tariffs, to get better trade deals, to make a more hospitable environment for businesses to launch in America, is the U.S. has a $7 trillion in debt to refinance coming up in the next 6 months. By crashing the stocks, by pushing the things like the tariffs and the economy, not necessarily the economy, but the stock market's down, pushes money into bonds, which lowers yields, which offers that cheaper debt refinancing that you were talking about. Feds cut rates, a massive liquidity injection into the market, which causes a major pump for risk on assets. So again, this is one of those things you got to be looking deeper, more long term. All these timelines we've been talking about with rate cuts being announced maybe 45 to 60 days from now. Most of these tariff issues should be worked out in 45 to 60 days from now, probably, but by the beginning of April. And all of these things will slowly start to align to bring back the type of economy, and more importantly, the monetary stance where investors can start free flowing that cash into risk on assets again. So again, be prepared for a rocky spring into kind of a boring summer. But as this timeline continues to go on, I'm sticking with my predictions that mid to late summer is when we really start to see the second leg of this bull run kick off. So, I mean, what does that mean for investors? I thought this was a great post here by Cook. All you need to do is DCA until the Fed pivots. The Fed always pivots. I don't think that's a terrible strategy. What are your thoughts?
Yeah. Yeah, I mean, that's really all you can do. Like, I made a post in the private group. It's like, at this point, if you have extra capital laying around, you can look for various entries on large cap assets, lower risk assets. We also picked up our position in Coinbase back. So if you took profits on crypto related stocks that you really like for the long term here, well, they've all come down. So you might as well pick your positions back up or buy them 25% at a time. Don't try to get too cute with it to try to pick the exact low if you're bullish for the long term. And then for the remaining year of your portfolio, it's like, hey, get the most utility you can out of that token, whether that's staking or locking, compounding, whether that's a discounted rate on a product or a service, or if you have them vesting, make sure you go to the vesting portal, claim all those tokens, know where they're at. So when this market turns around, you're prepared. I mean, there's always something you can be doing. Yes, it's not fun. It's not fun to see any assets down, whether you have cash or not. It makes life a lot harder to get on here and do content. But I still think it is a short-term thing. Trump's been in office 2 months, and what do you know? Here's the biggest thing that why the markets are affected so much is everything is so clickbaity. All last week, mainstream media is running with eggs. Oh my God, they're selling out everywhere. They're so expensive. And then yesterday it comes out, eggs prices just plummeted $2, and now they're cheaper than when Trump took office. Now that's just an example of the emotions the mainstream media is trying to drive for you. Even CNBC was doing that when really you're trying to take the emotions out, look to the long term, see what the plan is. And really historically up and to the right is the plan for Bitcoin and cryptocurrency. So you just got to try to survive these downturns, mentally check out, and come back when things start to look a little better. I mean, what else are you going to do here? There's not much you can do. You can try to get cute. Hey, we got a bounce today. You can sell at 81, and hopefully you can pick it back up in the 70s. But if you try to get cute and your outlook is that, hey, Bitcoin's going to 150, 200, 250 or beyond, and you get left behind, you had all this knowledge and all these expectations, and now you own zero of that asset. That just seems like a losing strategy over time.
Yeah, I think too many people give up on their grind, give up on their hustle when markets take a downturn like that. If anything, is where you have these opportunities. Everybody's super excited to be employing all the strategies you're talking about. DCAing, yield harvesting, looking to take gains and shuffle it into rotate it into a new bag. If you were excited about those when Bitcoin was at over 100,000, you should be just as excited about those opportunities now. Right, all the tokens you were looking at and kicking yourself for not getting a better entry in. You were looking at Bitcoin when it was 100K, going, damn it, I should have bought when it was 80K, when it was 70K, when it was 60K. I should have got in on Chainlink or blah blah blah. Pick your coin or the sector, AI tokens, whatever that RWA, whatever that happens to be. Well, now they're back down there, and now you're too chicken shit to buy, right? So you gotta think back and take the perspective of look at the plays that you're looking at when markets were up and you were kicking yourself for not getting a better entry. Well, now you have those entries. Now's the time you have the opportunity to get back into those. So don't lose that perspective as you are just because the markets are down here. Obviously you need to take caution when markets dip, but looking at the bigger picture, I don't think any of us believe that this bull run is over right now.
Yeah, we just finished a interview with Coach K, so that'll be coming out here on Crypto Paradise, so make sure to look for that. And that was kind of discussion of, why it hasn't really felt like we've been in a bull market because not much has happened. Bitcoin had a run, and then you had like really short mini alt seasons for various sectors, very short. And a lot of that is what we've been saying on this channel. Value extraction from scams. Pump.fun, 80% of those are straight up scams. Those devs took that money. So if you're taking the money out of the markets from the many, the hundreds and the thousands, and giving it to one dev who's pulling it to the real world, it's not cycling back into the crypto market. So a lot of liquidity has been drained from the overall market. Even though institutions are pouring in money, we haven't seen that alt season. Ethereum has been an absolute dog, which is the leading indicator for alt season. And hopefully that can turn around, and then we get into the true bull market at the end of this year. Like we've always been saying, hey, 2025, bull market for crypto, get involved. If it's on a traditional cycle, it should top in October or December. I've been saying I think it could be a longer cycle, which leads into 2026 due to regulatory framework and everything going on. And you're saying, hey, it starts in summer and then we'll see where it goes from there. So, it sucks. It's your dopamine levels are low. You're not seeing green candles. You're feeling poor on paper because your wallet balances in US dollars are low. But don't forget the conviction in the mindset, and you just got to survive a little bit longer because realize most of those funds if you weren't going to sell it anyways. If you think the bull market is going till Q3, Q4, Q1 of 2025 and 2026, what does it matter if it's 10x now or if it's 10x by the end of that? If you weren't going to sell anyways, that's one way that I try to look at it and try to refresh your brain. Hey, I didn't need that capital. That was going to be one of my hold positions for the entire year. So yes, this volatility sucks, but volatility is the name of the game.
Yeah, absolutely. And one of the core principles we always talk about is, don't you should be investing any money you can't afford to lose, especially in crypto, right? So, if you got to make your plans and stick to them. So, if that means you got to wait longer, it shouldn't be something that's affecting your day-to-day life to have to wait for that cash, right? And if you've been watching this channel at all, in the last couple of weeks, you'll know that in terms of actual news around Web3, around crypto, around Bitcoin, there's been nothing but bullish news after bullish news after bullish news. I don't know, I can't even keep track of how many stories of stuff that we would have been drooling over for a single one of these stories in a quarter, a year ago, or in the bear market, and now we're just getting hit after hit after hit. His administration has been the most bullish thing for crypto in a long time. Look at what's been going on. We've covered stories ad nauseum of Bitcoin Strategic Reserve, SEC cases coming in the favor of multiple major players in the space. New adoptions all the time, new ETFs. There's a new XRP ETF that's coming out. Like, it's just been hit after hit after hit. Although but at the same time the price has been going down. That's obviously due to exterior factors that have nothing to do with the crypto market, things that we can't control. But something that I did see here that was really positive in the last 2 days. We're looking at the Bitcoin chart right now. It's been pretty level for about the past 4 days. Despite the fact that yesterday Trump announced doubling the tariff on Canada. We saw what just the announcement of a 25% tariff on Mexico and Canada did to the market. That's what precipitated this massive drop in the market in the price of Bitcoin 2-3 weeks ago, whenever it was. Now we get breaking news of doubling of that same tariff that pushed things down, and Bitcoin didn't even flinch, right? So I think it's partly that sellers are finally getting exhausted. People are finally beat down enough that this news isn't as shocking anymore, and I think that's a good sign. I'm not saying we can't see any more downside, but it's gonna take much more impactful real news, real economic data to drive the price of Bitcoin down further. And I don't think that it can drive it down that much further without some sort of crazy black swan event, right? Not saying that the lows are in, not saying they're not, but we are seeing some good signs that some of this previous breaking news that would have just absolutely tanked the markets is now having little to no effect on things. So that is a sign of things starting to calm down a little bit and chill out on the market front here.
Yeah, let's just hope that the traditional markets can find a footing, and that helps Bitcoin. And then Michael Saylor says he wants to raise another $20 billion or $21 billion, and a large portion of that will go into Bitcoin as well. So we also, like you said, the bullish news just is decoupled from the market. In 2017, that would have sent the market up 100%. In 2020, it would have sent it up 50%. Now it's sent it down a percentage point. We have all the SEC almost daily dropping all the crypto cases. I don't even know if there's any crypto cases left. But then you have Senator Loomis and another individual writing up 2 separate bills in which they're like, hey, you can either take gold and sell it to buy Bitcoin, or we can sell B bonds, a Bitcoin bond in order to buy $200 billion of Bitcoin. Like, you have massive government agencies even proposing these things as ludicrous. Like, does that happen? I don't know. You have Texas saying they already signed it. They already passed it, $500 million a year on Bitcoin purchases for their personal state strategic reserve. So that's the type of news that previous cycles would have sent Bitcoin absolutely soaring, altcoins soaring, speculation soaring. And right now with the market timing, blow off top from Trump speculation, but really just the downward pressure of traditional markets and the uncertainty around inflation and everything, making those meaningless. So I'm hoping when the market finds a footing, let's recycle all these news cycles again. I think we need to collect all these, and when the market turns around, just start posting them every single day and get people to, hey, do you remember when this happened only a month ago? But hey, look what this is. Recycle this news when the market's looking a little better, and let's see the impact then.
Yeah, we're slowly starting to run out of these bearish economic factors, or potentially impactful for the stock markets. Things like these tariffs are going to be sorted out soon. The war in Russia is with Russia and Ukraine, another major point of contention with markets around the world. And great news there. Ukraine and Russia reach a ceasefire deal for the next month, looking for a longer term plan for peace there with the war. Which would be a very, very bullish factor for markets of all kinds around the world, let alone for the humanitarian fact of ending that senseless war over there. So all of these factors that have been pushing the markets down, that have been suppressing things, they're getting resolved, which is what Trump said he was going to do. And he is moving very quickly to get those things done. So
I think the Ukraine-Russia war is obviously the most important war or economic thing that's going on, more so than Israel-Hamas, because that's kind of already sorted, or anything else going on that you don't really hear about. This one's the most important because it directly affects all of the major powers except for maybe China. You got Russia and North Korea on one side, and then you got Ukraine in the middle of Europe and the United States, which is causing contentions there, as well as our taxpayers, because we see it from a different perspective of why are we funding this when this is really a war that shouldn't even have happened or shouldn't be going on. Because many people don't realize at the beginning of the war, Putin did come to the table with the peace treaty and said, hey, the land that we already took, we'll take that. We'll stop war now. Just give it to us. Zelensky said no. Now Russia has doubled the amount of land they've taken. There's been over 100,000 more people dead since then. And it kind of seems like Zelensky doesn't even want to come to the table unless he wins on all fronts. And it's like, Zelensky, you're not going to win on all fronts. So you need to save, your civilians' lives, but you also need to save the global financial support from Europe and the United States and come to a deal here. So, this is the biggest one. The ceasefire deal is big news. Not much of an impact on the markets, which is kind of wild, but I think that's because people kind of are pessimistic like me and understanding that it takes everybody to come to the table. And it really, to me, from the outside looking in, seems like Zelensky wants war, or he truly believes that he's going to win this war outright and get all of his land back and maybe even encroach on Russia's land, which I don't believe is a reality. But for some reason, Zelensky sees that as a reality. And then you can get into the deeper politics of Ukraine's rule, where there isn't going to be an election until the war's over. Zelensky's approval rating's at 6%. Does he really want the war over and to lose all of his power? Probably not. So I'm a little pessimistic on that. Hopefully, all it takes is the United States is already pressuring on them. Russia's pressuring on them. Will Europe continue to bend over to Ukraine and keep funding them? Or are they going to say, hey, this is a good deal. Let's take the peace deal and let's leave it at that. It's up to, I really think it's in Europe's hands now, because they're the ones who are still funding Ukraine and really being warmongers that they need to stop Russia here.
Yeah, without the bankroll, this ends very, very quickly. So hopefully we can see resolution to that here in the next month or so, while they have the ceasefire and they don't return to hostilities.
We'll see. Yeah, I mean, there's a lot of lives being lost. So really, it's about end that for really nothing.
Yeah, absolutely. Well, some more lighthearted, some more positive news. Love or hate XRP, it's certainly bullish to see that we're looking at staring down the barrel of an XRP ETF coming up here. Franklin Templeton, one of the biggest financial institutions in the world, seeks SEC's approval for a spot XRP ETF. This is obviously coming off the back of them winning their SEC case. One of the many we've been talking about in the last few weeks here. It just win after win for the crypto sector. Do you think we've seen lots of these be proposed? Obviously, ETH and Bitcoin are through. We've seen Solana up there. We've seen even a SUI ETF proposed. XRP was one of the next logical candidates. Do you think this goes through, and do you think these are impactful for the overall market, or is it just kind of a fun fluff piece news story that makes us feel good about crypto?
I mean, I guess, it was named in the list of 5 that could be the first strategic reserve tokens, or now they're calling it, the crypto reserve basket or whatever. So I assume it could be approved. They won the court case. So we'll see what the SEC decides to do here. The other thing is, with the pro crypto SEC, as long as they're not deemed securities and, they pass all the tests or whatever, who's to say they don't start listing, the top 10, top 20 ETFs and keeping a bulk of crypto investment in the traditional markets, which they know that they're going to get their fees and their taxes off of, which kind of run the entire financial system. I mean, which is very possible. Like you said, you've seen applications for SUI, for Solana, for Litecoin. None of those have really got approved just yet, but I wouldn't put it past them to do that if you have a pro-crypto regime and they deem these not as securities and they're some of the largest assets on the market. Obviously, over time, these spot ETFs are great for the market because they're buy and holders of people who otherwise wouldn't have any crypto assets in their portfolio. I do think if they do go the route of listing 10 or 15 of them, it does kind of dilute the power. The power being, it would be nice if it just remained Bitcoin and Ethereum ETFs, spot ETFs, until we get momentum in the bull market coming, because that means a lot of the institutional money will flow into Bitcoin and ETH, which really drive market sentiment and drive this alt season that we're looking for, rather than spreading that institutional money out to XRP and Solana and SUI ETFs, which kind of water down the proposal. Again, remember, these institutional players are just learning about crypto. If I was their financial advisor, it's a lot easier for me to go to them and say, hey, Bitcoin is the new digital gold, and Ethereum is kind of, internet web 3.0, and it's kind of a lot of things are being built on it. So it's like the new Microsoft, if you will, for investment. Now you're just telling these two investment pitches that they can correlate with former investments and really get into the market that way. If you start coming to them, well, we have Bitcoin and we have Solana and XRP does this and this, that, and the other. Well, a lot of people might just be like, oh, that's too much. I don't want any of my investment allocation in that. I think it's a lot easier just to focus on Bitcoin and ETH. Let's get some momentum. Let's get Bitcoin new highs. Let's get Ethereum above $5,000, and then let's start introducing new ETFs. But we'll see what the SEC wants to do, because they are pro crypto, and they're probably not looking at it from that perspective. They're looking at it, hey, passes the Howey test. It's not a security, large cap backing. There's XYZ percentage of interest. All right, XRP's approved. So.
Yeah, and I think the ideal scenario for our industry is that people start, taking that, possession of their own crypto assets, right? And for that to start happening, for self-custody to be more realistic for the average person, we do have, leaps and bounds we need to make on the UX and UI, ease of use case for individuals ourselves. But I think this is a great start anyways. Certainly.
Yeah, and there's other proposals that I would like to be approved first. The one is, I think it was by BlackRock, to have in-kind asset redemption, meaning if you're in their Bitcoin ETF, you can withdraw that and actually get the Bitcoin to your own personal wallet or a Coinbase wallet. Like you said, that would be self-custody. That would be a great thing to see. Also, we do see that Fidelity applied for their Ethereum ETF to enable staking, meaning they are spot ETF. They have that custody. They're using Coinbase custody, for example. They'll be able to allow to stake that Ethereum with the new Ethereum upgrades and pass on some of those dividend returns to the ETF holders. And I think that opens up more investment avenues, as now people are like, okay, I get this risk on asset, but I'm also getting this guaranteed 1.5% dividend return that they're used to seeing with their low risk assets, like when they invest in Apple or Disney, for example.
Yeah. Turning all these crypto tokens into dividend-paying assets would be an amazing upgrade for the average retail investor in the traditional markets. I think that would bring a lot of interest in. Kind of cycling back to the tariff news. Obviously, still all speculation. We don't know what's going to happen with the Europe tariffs, but the EU is eyeing retaliatory tariffs on the U.S. And there's lots of speculation that might be what it takes to push Bitcoin down into that the mid to low 70s range that we've eyed off and on. How
yeah, we kind of talked about it last week too. What's interesting is the headlines are all this negative doom and gloom around United States tariffing other people, and oh my God, sell all your assets, United States, da 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 da. But it's like, why doesn't anybody mention that the EU already has tariffs against the United States? Canada has much larger tariffs than 25% against the United States. China already has tariffs against the United States. Nobody mentions those, or people just don't know about them. It's not the new hot item to get the clicks. But that's just what I'm talking about, the short-term pain and not really understanding the bigger scope of what's going on and the long-term benefits as far as reduced inflation, rate cuts, whatever. But it's just these kind of clickbaity things is what is getting people to sell. And it's like Europe already has tariffs against us, and we don't. So I don't understand, why this is how it's regurgitated. Hopefully things get settled because, whatever, no tariffs. That's what people want. Great, good. We have until, I think, April 2nd for that to happen is when he's saying those are going to kick in, and we'll see how that goes. I will say a lot of the countries so far have talked a big game, and they've done things, but they've already backtracked pretty rapidly. The biggest one being Canada removed that 25% tariff on electricity already after the day prior, saying that they're going to actually increase that. So they come out, say big game, and within 24 hours, they're not only not doing what they're saying, but they're removing that tariff altogether because, in my opinion, they're getting exposed for what's really going on. Canada has much larger tariffs. Now they're getting exposed, and they're having to backtrack more than we're having to backtrack because it's like we're just doing 25% across the board. You have 25% on electricity and 45% on this and 200% on milk. And I think some of that's slowly coming to light, and we'll see where the dust settles. Hopefully, like you said, hopefully it ends in no tariffs. Everybody, free trade, free markets for everybody. I don't think that's realistic. But for the market's sake, that would be the much better result than more of this he said, she said for the coming months.
Well, we've talked some doom and gloom about Russia, but some positive news coming out of Russia relating to crypto. Their central bank is going to start allowing limited crypto investments. We seeing this more and more countries starting to open their doors to crypto, whether that be through a strategic reserve, through changing regulatory stances, through even central bank investment. Or the nation itself outright buying crypto, like El Salvador and a few of the other Central American countries there. Again, if we look at the crypto news headlines, they're almost all positive, except when they have to do with greater economic, non-crypto factors. So for people out there that are saying that the market's over, man, I just cannot see it.
Yeah, it'd be hard to, for them to say, hey, we're in a bear market now. That was a fun market cycle. Number one, yes, it hasn't felt like any of the other market cycles. You never had a mania phase. You never had you haven't even had Ethereum got near its all-time highs. That's about it. But it'd be hard to say it's over because NASDAQ now is to the point where you're looking close to where you should have a V-shaped recovery. If NASDAQ goes up, Bitcoin goes up. You have a pro-Bitcoin government proposing Bitcoin strategic reserves. If they start buying, Bitcoin goes up. You have Michael Saylor saying he wants to get another 21 billion. If they start buying, if Bitcoin goes up. You have El Salvador still buying 1 Bitcoin a day. So I just don't see, with all this Russia, all these countries supporting not only Bitcoin, but crypto assets, crypto utilization, crypto as an investment thesis. That's a lot of money. And I just can't believe that not only are we going to break the 4-year halving cycle for the first time ever, we're going to break it in a negative way with all this bullish crypto stuff that we've been talking about. We dreamed and hoped would happen since 2016 is finally happening now. I just don't see that as being the case. And people are like, well, Bitcoin went to 110. It's like we went to 69,000 last cycle with none of this in an anti-crypto regime in the United States and really anti-crypto all over the globe. So you're telling me now with pro-crypto regime, we're only going to go 25% higher than the previous all-time high and break the 4-year cycle? I can't see that happening. Could be wrong. But I can't point in that direction. I'm not going to let my convictions of a decade end now when I see what I'm seeing.
Yeah, and as long as you're not extremely short-minded, absolute worst case scenario, you're looking at holding your Bitcoin for 2.5 years, 3 years before we're back into the next bull cycle kind of a thing, which again I think is one of the least likely scenarios. So we've said a million times on this channel, this ain't a get rich quick scheme, right? This is as it's more volatile, and yes, it has the opportunity to make money more quickly than the traditional markets. But just like your other typical investments, like this isn't something that's going to magically make you a millionaire overnight.
And that's what gets people a little messed up too, because people see the headlines and like, oh, XYZ put 100 in this to make $1 million. It's like XYZ bought, sniped a random token. They sniped 1,000 of them, and this one finally hit. The average Joe isn't doing that. We even talked about in the Coach K last cycle. Here's the difference in the cycles. Last cycle, the people that were praised were Charles Hoskinson, CZ, Vitalik Buterin, Richard Hart, like these dev geniuses creating DeFi Summer, the Uniswap founders, whatever. This cycle so far, the person who was praised was Murad, who went on a meme coin stage and was praised about the super cycle for meme coins, and now he's down 90% on his bags. So it's like, the people who are put on a pedestal this cycle so far tells you why the cycle has been kind of floundering, and what kind of the only sector that's really gone off was the meme coins. And versus last cycle is, yes, we had meme cycle, but we had developers and founders for layer 1s, layer 2s, and infrastructure plays that were being put on a pedestal. And that's so far what we've seen. So hopefully we get this flight back to utility, infrastructure plays, and we finish this 4-year halving cycle more on a traditional measure, where we have a flux of new investors, both institutional and retail, driving the big caps higher, which leads into the spillage to altcoin season and various narratives that we can make a lot of gains on.
Yeah, Murad's another great example. If it sounds too good to be true, it likely is. I know we covered some of his stuff early on in the zeitgeist of meme season, and he had some good points at the time. But the fact that he is still continuously bull posting and has been telling people to buy for the last 3 months while assets have just been absolutely dumping, he's gotten more people I think then he's helped out. Is his long-term thesis that some of these meme coins are going to be back true? Yeah, absolutely. We're going to have memes back, just like the rest of crypto is going to be back. But if you've been buying when he was saying buying all of November, December, and January, you're probably not real happy with that, gentleman. So anybody's the get rich quick schemes, anybody that's trying to make that money quick is going to end up wrecked. Another great example of that is the story that came out recently here. I've seen lots of different numbers. I've seen 190. I've seen in the 200s, and these guys are claiming 308 million. Point being, it was a shitload of money. But on Hyperliquid, if you're not familiar with Hyperliquid, they have vaults where you can add your liquidity to let another trader trade for you. And this trader decided to take millions of dollars and enter a 50x long on Ethereum at $1,900. It probably dropped below its liquidation price, and the rest is history. So another great example. It looks too good to be true. Probably is. If you think you're,
and I'm not sure the timing. I'm not sure the timing on that one, but there was the rumor that the Ethereum Foundation was taking leveraged longs, and he probably copy trade that. Like, oh god, these insiders got to know something. And unfortunately, Nasdaq dipped 3% yesterday. That drug down crypto markets. Ethereum, when you're on 50x, you don't have much of a leeway, and it dropped $150 and liquidated that position.
Yeah. I think he bought it at 1,900. The liquidation price was 1,877. So you're talking, $23.
$23.
That ain't enough. You know how quickly Ethereum price can swing $27. If you have somebody that's saying they're going to be trading that kind of volume with that kind of leverage, be cautious, be wary. Don't get yourself wrecked, because it wasn't just that individual that got wrecked on Hyperliquid. Everybody that had contributed to his trading pool got wrecked along with him. So, be careful out there, guys. This is not a get rich quick scheme.
And the leverage I always warn about, because you can blow up your account. Like, hey, one Bitcoin. That okay, maybe that's cliche, but it's like, hey, if I own $1,000 worth of altcoin and it's down 50%, yeah, it sucks, but I still own all those tokens, and I may be earning staking rewards, earning more tokens for my conviction that I think it's going to go higher over time. Versus if I leverage on that, I lost 100% of my position. If the bull market comes back, I have 0 of those tokens. I have 0 staking rewards, and then guess what? My capital is out of the market. It's going to, these exchanges to pay the salaries of the devs who are keeping these perpetuals and leverage marketplaces open. Those people have bills, so they take it out of the market. And now only a fraction of your capital that was in the market is left and remaining after you got leverage long or leverage short liquidated. And that's what makes it really hard for the markets. When you see these leverages and how much money's going out and this, that, and the other, understand that there's salaries attached to that. All that money could be remaining in the market. And this is another reason why things are getting dampened. If the money keeps flowing out of the market from the many to the few, paying bills, utility bills, whatever, well, guess what? It's not in there holding the tokens, pumping those markets anymore. And it's unfortunate that OGs continue to get leverage liquidated. Yes, a lot of people can make money quickly off of leverage. You see that, but it's the same thing as the casino. You see everybody post about their big wins. You don't hear them post about their big losses. And the people who even win in this, they're not winning 100% of the time. They're just winning more than they lose, and they're posting about all their winners, which unfortunately leads people into the slaughterhouse in this leverage market. So
this is a great example of that. According to On-Chain Sleuths, it said the whale who was responsible for this major liquidation. He had rotated his Bitcoin into the holdings of the leverage ETH trade before suffering this liquidation. So now, not only did he lose that position, but he sold his Bitcoin to get into that position. So now
he lost his personal funds. Now that's however much Bitcoin he had, 1 Bitcoin, 10 Bitcoin, whatever, back into the market, and that liquidity might be coming out of the market as well. So it's just like, on these scarce assets, building and growing holder bases and holding more and more is how these get higher floors and go up and to the right. And when you're playing the casino game, well, it hurts everybody in the market, really.
Absolutely. Well, anything else? Any popping news stories that you wanted to cover here on our update for this week?
I think we covered it. There's a lot of pro crypto stuff going on, and the macro traditional market stuff is the same thing. It's all talking about inflation. It's all talking about tariffs. And, of course, the doom and gloom of NASDAQ. We're already seeing the CPI did come in under the 2.9. Markets had a nice bounce, but now they've given up about 50% of that gain. So see how the market wants to react to the rest of the day, see if it wants to hold a higher floor or if it wants to dig deeper and lower. People are like, what is wrong with crypto and Bitcoin? Guys, you can't swim upstream against the current when NASDAQ literally has fallen. It's given up all of its 2-year gains in the matter of days. That is going to put pressure on the markets. And yes, the blessing of institutional players coming into Bitcoin is them buying up that Bitcoin and holding higher floors. And that's why we're up here where we are. But the negative is they're trading their portfolios more in line with the traditional market and the NASDAQ, which means you have a little bit of a coupling there. And when NASDAQ is panic selling off, people are going to panic sell off their Bitcoin and other assets as well.
Absolutely. With the good comes the bad. You know, at the end of the day, stick to your principles, have a plan, work that plan. Don't let your emotions shake you out of those plans. You know, play it safe, never invest more than you can afford to lose.
Do we have any questions on YouTube or Twitter that you can see? I know with these streaming platforms, it's a little hard to see people's comments, but
not yet, not today. I think maybe what we should do is we'll take a poll in our Telegram chat for next week and ask for some questions or some topics that you guys would like to see us discuss on next week's midweek market update.
Yeah, and obviously things get quieter in the markets when prices are red. Not much people can do if they don't have fresh capital, less interest, or they've kind of panic sold out. But just keep tuning in, get our insights, create your own opinions. You know, we're here to give you our opinions, tell you that we still have conviction that in the long term things are going to be all right, and maybe they'll help you feel better about the holdings that you have. Remember, it was only a couple of weeks ago when some alts were showing a lot of green. People were getting that the momentum in crypto can switch very rapidly. And if you tune out too long, you're going to miss that momentum switch and find yourself lost in chasing the green candles rather than being prepared for them.
Don't get left behind, folks. Don't be where you were a few months ago or a few weeks ago kicking yourself that you hadn't bought earlier. Well, you're getting those opportunities again. You know, make it or break it kind of time here. So thanks for everybody that tuned in. Appreciate all the love and support you guys constantly give us. None of this could be possible without any of you guys. Keep tuning in. We'll be back next week with more market updates for you, trying to keep you up to date on all the latest and greatest and what's going on in this wild industry of ours. And until then, I guess we'll see you on the beach.